Okay, let's jump right in for this deep dive. Today we're digging into the financial fallout from those U.S. chip export restrictions, specifically looking at Nvidia and, well, China.
That's right. And we're working from some pretty fresh info here. NVIDIA's Q1 fiscal 2026 earnings report, and also some comments from the CEO, Jensen Huang.
Right, so our goal here is to really unpack the reported financial hits, get a sense of Nvidia's take on it, all the restrictions, the China market, and, why it matters.
And the numbers right off the bat from Q1 are, well, they're pretty big. NVIDIA reported taking a $4.5 billion charge. This was tied to the licensing rules for their H20 chips going into China.
Hold on, $4.5 billion, just as a charge. That sounds massive.
It is, and what's interesting from the source is that back in April when this was first flagged, they actually thought the Q1 charge might be closer to $5.5 billion. So it came in a bit lower than that initial expectation, but still, $4.5 billion is, yeah, substantial.
Okay, so that's the reported charge itself. But they also said they couldn't even ship another $2.5 billion worth of those same chips because of the rules.
Exactly. That's revenue they just couldn't book in Q1. Business lost.
Wow. Okay, so you've got the charge and the unshipped stuff. That's, what, like $7 billion in reported Q1 impact from these China rules alone?
Yeah, based on their report, that's the combined figure for Q1. Pretty significant.
And what about looking forward? What does the report say about Q2?
Well, the forecast, according to the source, is for an even bigger hit. They're projecting an $8 billion impact on Q2 revenue.
$8 billion. And what's their total expected revenue for Q2?
The report puts the total Q2 revenue forecast around $45 billion. So, $8 billion out of $45 billion is a really sizable chunk affected by this.
So even with these huge reported hits Q1 done, Q2 expected, what's the company actually saying? Are they backing away from China?
Not really, based on the source material. Jensen Huang, the CEO, was reportedly quite firm on the earnings call. He basically said they're looking for ways to still compete in China's AI space, despite these, well, write-offs and the lost sales.
Okay, but why? If they're reporting these kinds of losses, why keep pushing there?
His reported comments give some insight. He called China one of the world's largest AI markets and a springboard to global success. That's a direct quote reported. And he also apparently highlighted that half of the world's AI researchers are based there.
To listen to the full podcast episode, please follow the link in the description. Also, don't forget to like, comment, and subscribe.